Hello, good morning everyone. Welcome to Phillip Securities Research Morning Call for 5th of September 2022. Today we have quite a few stock counter and technical analysis update. We will end the session with our usual Singapore weekly. So without further ado, let us begin with Salesforce second quarter results. So basically Salesforce, it sells cloud-based software under a subscription-based business model. And it runs on a pay-as-you-go basis, just similar to Netflix or Amazon Prime, where you pay monthly or annually for the services subscribed to. So Salesforce software, it helps companies organize and handle sales operations as well as enhance customer relationships. In terms of its performance, second quarter results, they were in line with expectations. The first half 2023 revenue and adjusted PATMI, they were at 48% and 45% of our full year forecasts. So in the second quarter, Salesforce reported earnings per share of 7 cents on a total revenue of $7.7 billion US. PATMI, however, it fell by about 87% year on year to 68 million US dollars. And this was mainly because of lower gains on strategic investments and higher operating expenses like research and marketing. They grew by 30 and 25% year on year. So Salesforce reported adjusted earnings per share of $1.19. This is excluding stock-based compensation and amortization of purchased intangibles. So moving on to the positives, Salesforce reported revenue growth of 22% year on year or 26% year on year in terms of constant currency. And this was ahead of the company's top end of the guidance range. The growth drivers were mainly the sales and service cloud segments. They grew by about 15% and 14% year on year respectively. These two segments are the core of Salesforce, mainly because they contribute about nearly 50% of the total revenue. So then the platform, this includes the collaboration tool Slack. This segment grew its revenue by about 53% year on year to $1.5 billion US. The Slack contributed to the revenue about 376 million US dollars. And the number of Slack customers that spend over 100,000 US dollars annually, they grew by about 40% year on year. Secondly, the remaining performance obligations. This mainly is the future revenue that has already been contracted but not yet recognized, delivered. So this grew by about 15% year on year to 41.6 billion US dollars. This was in line with the company's guidance, and mainly because of the continued demand for its customer 360 offerings and new customer wins. Also, multi-cloud adoption, it maintained traction as the number of customers who purchased 5 or more of the Salesforce cloud products, they grew by double digits. Then the attrition rate, it remained at record low levels of about 7.5%. Lastly, Salesforce, it announced a share buyback program of up to 10 billion US dollars, and this was to dilute the effect from stock-based compensation. This reflects management's confidence around the future growth and profitability. Now, moving on to the negatives, with the strong US dollar, strengthening US dollar, the Salesforce top line was impacted by foreign exchange headwinds as it generates a significant portion of its revenue from international markets, and mainly the currencies that impacted were the euro, Japanese yen. So foreign exchange, it had a negative impact of about 250 million US dollars on the second quarter revenues. This was ahead of the company's guidance of about 200 million. So the 250 million, this was as much as 368% of its PATMI that's reported in the second quarter. So additionally, the company had previously forecasted an foreign exchange impact of 600 million for FY23. But now it expects a negative impact of about 800 million. So moving on to the outlook now, for FY23, Salesforce has lowered its sales and adjusted earnings per share forecast. The company, it expects now the total revenue to be in the range of 30.9 billion US dollars to 31 billion. And this implies a 17% year-on-year growth. So the revenue revision, downward revision, this was mainly because of the incremental foreign exchange headwinds. And the company said that in July, it has started to witness cautious buying behavior from the enterprises, and this is resulting in deal compression and stretched sales cycle. However, the company, it maintained its adjusted operating margin forecast it to about 20.4%. And this was mainly because of higher operating leverage. Salesforce, it reiterated its GAAP earnings per share guidance, but slightly reduced its adjusted earnings per share guidance range to 4.71 to $4.73. The updated FY23 guidance, it includes 1.5 billion of revenue contribution from Slack business. So, finally, we also reduced our FY23 revenue and adjusted PATMI by 2% and 1%, mainly because of slowdown in IT spending and as well as incremental foreign exchange headwinds. We also increased our weighted average cost of capital to 6.6%. And as a result, DCF-based target price, it's now reduced to $213 from $253. So despite the near-term challenges, we believe that Salesforce long-term, it enjoys tailwinds from digital transformation trends as companies, they are looking forward to more holistic views of their customers, and as well as its new capital allocation plan to start returning excess cash to its shareholders. So I would now like to pass on to Glenn for updates on Silverlake Axis. Thank you.
Thanks, Ambrish. So I'll be covering Silverlake Axis Ltd. So they recently released their second half and full year FY22 results. A brief overview of the earnings. The earnings of 182 million ringgit was above our estimates at about 114%. And the variance came from higher than expected software licensing and software project services revenue, mainly due to 2 new Mobius contracts signed during the year. And their FY22 DPS was 35% higher year on year at 0.7 cents Singapore dollars. So their project-related revenue, which comprises of software licensing and software project services, increased by 66%. And this is due to the delivery of new software licensing deals in Indonesia and Thailand and the ongoing implementation of 2 new Mobius contracts. While their recurring revenue, which comprises of maintenance and enhancement services, insurance, ecosystem transactions and services, and retail transactions processing, increased by 6% year on year and contributed to more than 70% of total revenue. So I'll jump straight to the positives. There are 3 positives. The first positive is that their project-related revenue increased 66% year on year. So as previously mentioned, their software licensing revenue increased by 110% year on year, which was largely contributed by the delivery of new software licensing contracts and banking deals secured in Indonesia and Thailand. While their other arm of their project-related revenue, which is their software project services revenue, increased by 39% year on year. And this was mainly due to the implementation of their 2 new Mobius contracts, which accounted for about 37% of their total project services revenue. And the second positive would be that they had stable recurring revenue growth. So their maintenance revenue grew 8%, while enhancement services revenue grew 2% year on year. And this increase was mainly from the commencement of new maintenance contracts upon completion, as well as the cutover of several key implementation projects and the new enhancement contracts secured from customers. Their insurance ecosystem transactions and services revenue also increased by 15% year on year as the vehicle claims processing activities recovered. The addition of processing activities from new Hong Kong customers upon completion of system integration also contributed positively to their recurring revenue growth. For the third positive is that they had a record order backlog. So Silverlake has a long track record and a proven client base in Southeast Asia, with 3 of the 5 largest Southeast Asian-based financial institutions using its core banking platform. And it has also largely retained all of its clients since bringing them on board its platform. The Silverlake's project pipeline is healthy at 1.9 billion ringgit, with a record high order backlog of around 570 to 600 million ringgit. Silverlake is also beginning to close more deals and is witnessing an uptick in inquiries about its financial services, market solutions, and capabilities. For the negatives, however, there's one negative, which is that they have lower GP margins in FY22. So it was lower at about 57% compared to 60% in FY21. And this was mainly due to higher provisions taken for bonus payouts in FY23. Management has also said that there was a higher percentage of hardware sales, which usually carries a lower GP margin. For the outlook, Mobius banking platform is their differentiator. So just a bit more recap on what this Mobius thing is. It was launched in 2020 and it allows banks to roll over the new digital products in a targeted and timely manner. So it's a cloud-based banking software, and it allows banks to use their existing core banking software and propel them to new digital products. So what are the potential users of Mobius? It would be it includes new digital products in credit cards, debit cards, personal loans, and deposits. And also, it being cloud-based, it avoids the need for banks to purchase and manage hardware assets. Silverlake has also recently signed a deal with one of the largest banks in Thailand and is continuing to see increasing inquiries in the region. We expect Mobius to generate almost 100 million ringgit of orders over the next 2 years. The second part of the outlook would be that Silverlake's recurring maintenance and enhancement revenue has contributed to more than 70% of their FY22 revenue. And Silverlake's core banking software, which is called SIBS or SIBS, and their continuous maintenance and enhancement provide a steady stream of recurring business for the group. The SIBS provides core accounting and compliance. So with the opening of borders and economies in ASEAN, we can expect that Silverlake's customers to increase their IT spending to accelerate their digitization plans to grow. As such, we maintain a buy rating on Silverlake Axis with a higher target price of 49 cents. We have raised our FY23 PATMI by 18%, and our target price is pegged to 20 times PE. Our target PE of 20 times is 13% higher than the historical average PE of 17.7 times. In our view, Silverlake should trade at a higher premium to its historical PE with the introduction of the Mobius banking platform, as well as the resumption of bank IT spending after the pandemic. So that's all I have for Silverlake. I'll now hand it over to Darren.
Thanks, Glenn. So we had a TR webinar that was only exclusive to TRs and which excluded the retail clients last week on Frasers Hospitality Trust. So this webinar was focused on the privatization. So just a little bit on Frasers Hospitality Trust first. They have a market cap of 1.36 billion and is a hospitality REIT with assets in Singapore, Australia, UK, Japan, Malaysia, and Germany. So this privatization is by a fully owned subsidiary of Frasers Properties, and it's at 70 cents and is by a trust scheme of arrangement. So this price is 43.8% over the 12-month VWAP, and it has an implied price to NAV of 1.07 times. And as you can see in the graph on the bottom right, that is the price over the 1 month, 3 month, 6 month, and 12-month VWAP and last transacted price. So as you can see, it's all at a quite a good premium over the last transacted price and the VWAPs. So if you're an IPO holder, you might not be very happy with this deal as the IPO price was at 88 cents. At pre-COVID levels, Frasers Hospitality Trust was trading at about 70 cents. So we think that this offer at 70 cents is a good deal because, first of all, it is an immediate upside for shareholders instead of waiting for the uncertain recovery and outlook amidst recessionary pressures, and the strengthening of Singapore dollars offset local currency revaluation gains of their FHT assets. Also, FHT is a very small free float at 36%. As you can see on the graph on the top right, it is ranked 32 in a free float market cap of the of the REITs listed on the Singapore Exchange. So it's very small. So it's low liquidity and it's unable to be included into major stock market indices because of that. And because of its small size as well, it's limited in its flexibility in undertaking asset acquisitions for growth. So we reiterate that we think that this 70 cents is a good offer and shareholders should take this deal. And just on a side note, that their EGM is on 12 September. So that is where shareholders will go and vote whether they will take the deal or agree or disagree. So with that, I will hand over the presentation to Terence.
Yeah, thanks, Darren. For GuocoLand is Phillip on the ground for their full year 22 results. So GuocoLand is a Phillip on the ground, sorry, and then so we have no coverage on the company. Its principal activities are property development, property investment, hotel operations, and property management. For full year 22, its revenue and NOPAT increased by 13% and 132% year on year. This was driven by both their property development and property investment business. For its property development business, it grew by 12% on a year-on-year basis. The uplift in revenue was from the progressive sale of some of its existing projects like Guoco Midtown Modern and the Guoco Tower. So for 2022, they sold 1,200 residential units in Singapore, China, and Malaysia, with a total value of approximately $1.6 billion. For comparison, for the same period last year, they also sold about 1,200 units. For China, the demand weakness in Chongqing is affecting some of the sales of its projects there. Chongqing Central Park and Chongqing GuocoLand has been affected by the weakness in demand in the Chinese property market. Property investment is a bright spot in their full year 22 results. It grew 10% on a year-on-year basis, and this was driven by healthy leasing demand in Guoco Tower, with positive mid-teens rental reversion for some of the rentals that are coming on board. Management is guided for rental reversion to maintain this positive momentum for the rest of 2022. The development of Guoco Midtown and Guoco Midtown 2 and Lentor Modern will also boost its property investment arm. For full year 22, 60% of its earnings now come from investment properties. In terms of outlook, the group remains optimistic on the Singapore property market and is looking to replenish its land bank. Having said that, they look at a few criteria such as being close to the MRT and being able to value add to the development. This also as the company recently launched Lentor Modern over the weekend. The starting price is $1,880 PSF. The preview has started. The sales launch is expected in 2 weeks. The group expect the Lentor Modern to TOP in 2026, and Lentor Hill will also follow after, expected to be probably in the second half of 2023. The group also guided that they will be looking to monetize the property investment portfolio that they have now. All options are on the table, and the group highlighted that this can come through the establishment of a REIT or sub-sale to realize the value from their property investment business. So that's all from me for GuocoLand. I'll hand over the time to Zane.
Thanks, Terence. So now I'll be covering on Dawn Agro. So last week we had the opportunity to meet over the Zoom call with the management of Dawn Agro to listen to their first half 2022 results. So company, we don't have coverage. Its share price is trading about 23.5 cents and it has a market cap of about $35 million. So the principal activities of this company is that it does cultivation and sale of agricultural products such as winter wheat, sunflower, corn, and raw milk. Then for first half 22, revenue came in at about 18 million, which was up 91.6% year on year. Their crop production, which covers 60% of its revenue, was also up about 171.9% year on year. Livestock and milk was up 22.6% year on year. For geography, they own assets in the Commonwealth of Independent States region, and their main production regions are in Rostov and Volgograd, which are cities in Russia. So for the market opportunity, the company believes that the rising wheat future price based on the Chicago soft grade winter wheat, and given that their agronomists feel that the favorable weather conditions this year, and also coupled with the trend of rising wheat consumption based on the higher feed use for Russia and Australia, can expect to lead the increase in world production present good opportunities for this stock. There are also no disruptions in wheat production caused by the Russia-Ukraine conflict. For their proprietary technology, they have a few technology which are cognitive agropilot, smart polymer, Mustang nutrition feeding system, and live soil, which are used to boost their yield and reduce their production costs. They also completed the setup of a solar plant, which is expected to break even in 5.5 years. And with the substitute power generated, they can reduce carbon emissions by about 20.6 tons of carbon dioxide per year. So for the general outlook, they are looking to increase the production of sunflower, which is their high margin crop, and also looking for opportunities to expand their land bank and look for crops with good margins and suitable for farming on their land. So that's all from me from Don Agro. Next slide. So I'm moving on to the technical analysis section. For the Straits Times Index, we believe that a retest of the immediate support region at 3160 to 3170 is likely. This is because after the recent bounce from June to mid-August, where we hit about 3,300, the STI has been in a pullback channel as of now. And the immediate support lies at about the 3160 region, where is the 61.8% Fibonacci retracement support. And there's also the Ichimoku cloud support, which is about 3167 over there. So we believe that it is likely for the index to pull back in the near term to test this support region before it makes a move up again. Next slide. And moving on to the S&P 500, it has been in a pullback recently, but we believe that a dead cat bounce to test the immediate resistance zone at about 4,000 to 4,060 region is possible, given that we have tested the 3,900 support level. So on the 4 hours time frame, we can see that as the index made a lower low, but however, the technical indicator of the RSI made a higher low. So we observed there's bullish divergence in the index, which could bring about a small bout of bullish momentum despite the general downtrend. Next slide. So next, we have Ford Motor. Yeah, for this, we initiate a technical sell at the price of $15.41 US. Stop loss can be placed at about $16.7 US with a take profit at $13.20 and second take profit level at $10.60. The stock last closed at $15.16 on Friday. So we believe that the price is likely to hit lower after hitting the downtrend channel resistance. This is because there was a bearish crossover of the quicker 5 and 10-day moving averages over the 20-day at the downtrend channel resistance area, which actually gives a bearish downside. Also, bearish divergence was also observed when the price made a higher high at the resistance area while the RSI indicator made a lower high. This discrepancy actually will point towards a bearish downside because the momentum is actually slowing. Thus, we could see price reaching the first support zone at about $13.20 to $14 before heading to the next support zone at about $10.60 to $11.70 thereafter. Next slide. So lastly, we also cover another individual ETF in this case, which is the SPDR S&P 500 ETF Trust. So for this, we have a technical buy at $389.80 with our stop loss at $380. You can look to take profits at $410 and $430. The stock last closed at $392.24. For this, we feel that a retest of the immediate support region at 386 to 393 is possible before the price edge higher. This is because the Ichimoku cloud support and the previous neckline resistance that turned support will provide some support level at 389.8. Also, the 61.8% Fibo retracement level provides support at the 388.74 level, using the swing high of 431.73 and swing low of 362.17 as points of reference. Thus, we feel that price could reach the first resistance zone at 403 to 410 before reaching the next resistance zone at about 420 to 430 thereafter. So that's all from me for the technical analysis section. I'll pass on my time to Paul for more updates in Singapore Weekly.
Yeah, thanks, Ding. So I'll move on to our report we released this morning. It's regarding the Investor Day that Singtel organized last week on Thursday, the 31st. In the report, there's a lot of text, but let me just highlight some of the key themes. So the key theme, if you go to the last paragraph, was that what we see is that mobile prices or ARPU is recovering in Singapore, Australia, India, and Indonesia. And also, what is more challenging is AIS of Thailand and also NCS. So if you look at the first bullet point, in Singapore right now, what we see is that there's prepaid is picking up as the foreign workers return. And not only are subscribers rising, they're also using more 5G, I guess, especially if you're stuck in the dorms. So I guess there'll be more use of online entertainment, I guess. That's one of the reasons why we see this pick up, also 5G. Roaming is returned as borders reopen, but what we are still missing and the opportunity is the visitors because of still lockdowns in Korea, Japan, and China. The other interesting thing is that I think consolidation is possible. I think right now in Singapore, we have 4 mobile operators, including TPG. But there's a possibility that we could see consolidation because when with upcoming 5G, I think TPG may not have enough spectrum. Number one. Number two, they also have to ramp up their capex. Number three, TPG also recently separated their Singapore and Australia division. So there is always that chance that they did it because the possibility of a consolidation from the current 4 to 3 or even 2 players. The other second thing is on Optus in Australia. So mobile prices are recovering. And also the other thing, a bit more nuanced, which maybe we don't really follow that much, is that in Australia, Telstra, the incumbent, which is like the Singtel equivalent, is doing this they're merging their networks. So what Optus just says that is uncompetitive because what it means is that Telstra now can get access to TPG spectrum. So it's like two competitors ganging up on Optus. The other thing is NCS. So NCS is an IT service company. They mainly service the government and government agencies. So right now they're trying to grow outside government into the region and to the private sector. Right now, this segment will still be at the investment stage, whereby they still need to ramp up the workforce from the current 12,000 to 20,000. So earnings will be subdued. Of course, the other growth area is data centers. So the data centers, right now, they generate like 250 million from 60 megawatts. They look to double it in Singapore. Some of the issues that we've found was that for data centers, 1/3 is still exposed. So 2/3 they can pass on the utility cost, but 1/3 they are exposed and need to wait until the next recontracting terms. They weren't very explicit on it. But the other thing is that data centers, there's limited organic growth. So they can grow from expansion, but organic growth seems to be a bit limited. We only can guess that they're very hard to negotiate for growth and when you're dealing with all these big hyperscalers like Facebook, Google, and so forth. In terms of the associates, for India, I think the positive news is that right now, although there are three competitors, in effect, there's only 2. The third competitor, which is Vodafone, lacks capital and also scale. So there's also worries whether the parent, Vodafone, will actually want to fund their Indian subsidiary anymore or Indian operations. And also they are subscale because they are only 17 market share compared to 33 for Bharti. So when you don't have the scale, because India is such a huge market and pricing is so low, you don't have the scale, you cannot compete as well. In Thailand, Advanced Info, that was a bit more, the outlook's a bit cloudy because they're facing intense competition from unlimited prepaid price plans. There's some consolidation, but they seem to see the consolidation by the number 2, number 3 could be an opportunity to grab market share. So that also implies that pricing may still be low. Globe, which is the other mobile operator in Philippines. There was supposed to be a third operator coming in detail, but they are also facing funding challenge and apparently also have a vendor financing issues. So in the end, Philippines is also back to the two-player market. In Philippines, inflation is an issue because you have rising fuel price, rising sugar, and price and so forth. But what thing has been good in Philippines is that the OFW, which is the overseas foreign remittances, which is the Filipinos working overseas, that has been strong despite the inflationary period. So that will actually hold the economy. For Telkomsel, the largest mobile operator in Indonesia, competition seems to be more rational. They've done a few rounds of price increase. They are one of probably the more aggressive in their internet strategy. So they are working with GoTo, which is Gojek and Tokopedia on actually building games and also working on distribution. They also took share and in also Bank Pharma, which is they're also working on digital banking out of Indonesia. So probably Telkomsel is the most aggressive in terms of internet initiatives. So the other last point, the group, the CEO is targeting return on invested capital from current 5.4 to high single digit. Now this basically means the earnings will double. I think we doubt that. But do you think there are tailwinds helping the Singtel, which is rising mobile price and also disposing of some of the loss-making business like our Mobi, and also the other one was I didn't slip my mind, but the other, so they could dispose two more businesses which could actually help raise the ROIC, but to hit the high single digit, I think we kind of doubt that. So we maintain a clear and unchanged target price of 305. The next slide. So in terms of Singapore, some of the macro numbers, so hospitality or hotels in Singapore are doing exceptionally well. So the RevPAR, which is room rates times occupancy, is essentially revenue, is up 140% year-on-year to $205. It's actually back to the July 19 pre-pandemic levels. Well, one of the reasons why RevPAR is so strong is because room rates in Singapore is at the record highs now. This is the average number, 259. The previous high was in 2014. Healthcare is also picking up. Private hospitals is still holding. Dental is up 30%. Manufacturing activity is starting to slow down in Singapore. This is the weakest reading. So this is a survey number. They just ask you whether is it better or worse. So it's one of the lowest in almost 2 years, in more than 2 years. In the US, we all saw the employment numbers. Won't go so detailed, but although employment in the US is 315,000, less than the July 500. But bear in mind, this is almost double the rate in 2019. So 2019, the average monthly job additions was 164. So in July was 300, August was 300. So it's still double those levels. So labor is still very robust. The other a bit more nuanced, is the participation rate. So economists like to look at this. So it means that there are more people joining the workforce, and this is important because this will help keep wages, I guess, a bit more contained. So it won't be like runaway wages. The PMI, the new order index, was surprisingly strong. So manufacturing activity in terms of orders did get a bounce in August for the US. Another Fed official again just mentioned, this is a FOMC member, so they are voting members. Mentioned that they want to raise the Fed funds rate from the current 2.25 to above 4 in the coming months. So technically, the sentiment is very weak. I think it's going to be hard to offset this sentiment, which is the narrative right now is now don't fight the Fed and don't fight the economy, which is because the economic conditions are slowing down. So we're going to have this like negative duet of rising rates into recession. But we still think there could be a counter trend really, because we think inflation numbers are coming off. Next Monday, they should see the read. So they might see a bounce there. I think that's what we are. These are all our short-term, very short-term views or even guesses. But for Singapore market, I think in general, the reopening of borders theme and the recovery in experiences is still the sweet spot, like what we see in hotels and in the other related industries. There's also another global growth shock. I think on Friday, late Friday, Gazprom announced they will cut gas, that whatever 20% balance to Europe. So Europe's facing this really recessionary period because what happens that once the gas is cut, there will be rationing and some even steel mills and everything also shutting down because the gas price is too expensive. So what we're going to see is the ECB is probably on the 8th, probably going to raise interest rates despite the economy weakening. So we got very intense stagflation there. So all this is generally going to be positive for coal because they probably have to scramble for other sources and restart the coal plants in Germany. In terms of the webinars, some of the key things to watch is probably the ECB on the 8th of September. There's ECB and Powell's speech in this Q2 conference. But anyway, webinars we have on the 7th. We have a United Hampshire if anyone's interested. And the other thing is, of course, what happened to Comfort? I guess the one that everyone will want to know more is Embarador. So Embarador will also do a webinar with us. It's not on poems yet, but it's, the planned date is on the 20th of September. Next slide. Okay, just a refresh. So the current interest rate now is 2.25. In September, if you look at that, 2.33. So this is the effective Fed funds rate, 2.25 to 2.5. So the market expects by the upcoming September a 75 basis point hike, November 50, and December another 25. So this should. But then what the market thinks that rates will continue to climb up to March, and then will start to taper down by end of December. But I mean, this is just the Fed fund futures expectations. This is not the usual 0.25 because this is the Fed funds rate. Because Fed funds is a range, right? So you can put like 3.47 could be 3.25 to 3.5. Next slide. But you should expect another 150 basis points of increase in interest rates for the next few months. So let's have two Phillip on the ground. So RE&S is a F&B operator. So they had an analyst briefing. So they own namely the Ichiban chain of restaurants, the Ichiban Boshi, Ichiban Sushi. So they had a big bounce in earnings. So second half, the earnings was, if you exclude the GSS, which is from the government, you're looking at maybe 4 million profit compared to a loss a year ago. So this stock is trading about 10 times. The first half was really bad because 5 out of 6 months was, well, there are all kinds of restrictions, 2 packs, 5 packs. So right now, without social distancing, it's very important because now the restaurants can operate at full capacity, which in the past with social distancing, you got to close some tables, shut here, so that's not ideal for a restaurant. They also see a spike in sales in the CBD area as workers return. They also plan to raise prices in June and July. For cost, the interesting thing they said was rental will never come down. So indirectly, what it means, the malls always have bargaining power over them. But they are trying to improve the labor and so forth. For ready to eat, they are selling directly a new business segment for them to sell onigiri directly to 7-Eleven using their central kitchen. Delivery is now 13% of revenue. I won't go through all those a bit too detailed for everyone, but in terms of the outlook, of course the recovery should improve further into the following half, into the next December half, because they also raise prices. And surprisingly, their earnings, if you analyze it, 8 million is actually better than even pre-pandemic levels. So some of the reasons we think is maybe they got no new business, which is online delivery, which they never had pre-pandemic, or very little of it. New products, which is something new and unique for them. And they're also looking to study the franchise model. So this could also possibly be another revenue driver. So they're probably one of the better or more profitable F&B companies on the SGX. Next slide. Last one for me is ISO team for Phillip on the ground. So they released also an analyst briefing. So this company is a very small company, but just for an update, they specialize a lot on maintenance, repair maintenance. So for HDB will be the home improvement program, which is now essentially, is it 10 years or 30 years? Sorry, I can't. But there's usually a cycle, and then they have to improve. There are 2 cycles in a lifespan of a HDB where you have to do, I think it's 30 years, where they do this HIP, where they upgrade your washroom and so forth. They also work for town councils where HDB or a lot of the homes need to repaint it's compulsory to repaint every 5 years. Hawker upgrading and so forth. So the outlook continues to be not outlook. I mean, the results was big because they had a loss of 6 million. They had to make bad debt provisioning and so forth. So if you look at the table on the right, this is the third year of losses for them. But demand is strong right now. So the outlook is there's a significant improvement for them because demand is returning after the disruption. I won't go through all those, but basically everything's recovering because there were all the disruptions. Margins could be even better than pre-pandemic. Historically, it was at 10%. But during the pandemic, when they were bidding for jobs, they were basically bidding for jobs even though they were breaking even. So that's why you see all these losses. But all those order book is already being flushed out. One of the reasons why the margins can be better than even pre-pandemic is the competition. So one of the major competitors, which is equivalent in size of them, I think went bankrupt. The other thing is because of the limited pool of workers, there's only so much competition. So to give you a flavor of the competition, in the past, in any job, there used to be 15 tenderers. So now this is like almost 1/3 to half. So now only 5 or 7 people bidding, and they are usually the largest in terms of the competitors. Again, this is just for information. Initially they had trouble getting foreign workers because when they opened in October, most of it was allocated to the BTO because I mean BTO had to be built first. So those are the priority. And then even if you get workers, you had to quarantine them for 21 days. But they managed to pull through, and they even spent 2 million to get to recruit workers upfront. So the outlook is definitely improving as they clear away all these losses from the legacy contract, and the order book has bounced to almost 200 million. Next slide. So this is just my last segment. I go through our usual every month end. We will just run through the absolute 10 performance. So the SGX on the right was basically flat. Year to date, the SGX up to August is up 3.1%. For us, we are up 1.8. What pulled us down was a lot of the REITs was performed badly, and the mid caps is the one that pulled us down. Performing well, like probably better outperformer was probably like DBS, and the large caps like Singtel and also Keppel. The next slide. In terms of the sector performance, is I think very clear. The table on the left, all the REITs just performed badly. Almost every REIT just was. You can see all the various sectors: hospitality, retail. All the REITs got sold down. Finance and conglomerates performed better. On the table on the right is just some of the names that perform better, like Marco Polo. This is not the absolute list because we can't exclude a lot of stocks. This is probably a pool of only 120 stocks, but those that are a bit more notable, maybe like Marco Polo did well, the coal companies did well. On the right hand side, all the trust, Prime, Digital Core, these are the ones who underperform. At the bottom are the STI gainers and losers. Again, this is just purely for your reference. A lot of the REITs underperform. You look at the top 10 STI losers. Next slide. This is my last one. This is again just for reference. So what asset classes did well in August and year to date? Basically nothing was up. I think the best performer was commodity ETFs on the far right, which is basically flat. The worst performers was bonds and REITs. For year to date, the worst performer has been Nasdaq and even the bonds as well. So this is not the treasury government bonds. This is the corporate bonds out of that's listed on the US ETF. Okay, I think with that, I think we can move on to Q&A. Next slide. Next slide. Do you have the slide on the community page? Oh, okay, never mind. It's okay. Thanks. All right, we can go to Q&A.
I think I'll just go first. Sorry. Okay, you can see me. Okay. See, I think there's one question on Silverlake. Yeah, this is a very good question. I'll just read out the question. Is there any idea what is contributing to the recent weakness in Silverlake Axis share price, despite the positives which I have just mentioned earlier? So this is just a best guess, right? So I mean, we don't really know why. But for me, personally, what I would think why this is not performing as well as it should. Firstly, it's quite complicated, quite confusing what they do. So I mean, we also took a while to figure out what the Silverlake's business is. So a lot of people think that, oh, a Silverlake, they do banking software. So it means that if the sort of the market isn't doing well, so they will be affected because the banks would spend less. But we have also learned that a lot of their recurring revenue, which I mentioned earlier, their maintenance and enhancement services, it contributes to more than 70% of their revenue. It's very sticky. So let's say if a bank would, if MAS changes compliance or they upgrade something, so the bank would, or the customer will need to go back to Silverlake and say, okay, can you please upgrade or change this part of their software? So because we need to be in compliance with MAS rules. So this also they would fall under their revenue and they would charge. So anything that they need to change, or they have a new credit card, or they change the credit card terms, or let's say, or recently, when the banks increase all their interest rates for their current accounts. So this also they will need to go back to Silverlake to say, okay, now we're going to increase the rates. Can you please help us do it? And they will be charged. So this part of their revenue is very sticky. So it will not go away. And which is why they have also mentioned, as in like the company has mentioned, that people who use their software, they do not leave. So it's they have retained, I think, mostly all of their customers from day one. So that would be the first, I think that would be the main reason why the share price isn't doing as well, is because a lot of their investors don't understand how their core banking system and the enhancement and the sort of services which they provide, the stickiness of it. And I think the second one also would be their new product, which is what I mentioned earlier, the Mobius cloud banking platform. Like why is it so different from their current core banking platform which they provide? So I just a very brief one. I mean, it can go on forever, but mainly it's because it's cloud-based, so they don't need the need for sort of like the data centers anymore. So this would be definitely better for the company, lowers the cost. And also, they can adapt much quicker. So it's more efficient and it's more effective as compared to the older platforms. So I think I have one more question. Hold on, let me just click that one first. Hold on, one more on the banks, I think. Yeah. This question, I'm not very sure what you mean, but it says, how are banks, I interpret it as what is the outlook for the banks in this year and 2023. So the interest rates would continue to, of course, boost the bank's net interest income and their net interest margins. So that's one of the big factors. But however, there is also a worry that the banks will be affected by sort of a lower loan volume because of the higher interest rates. So this is a double-edged sword. So firstly, it will help them by earning more net interest higher net interest margin as well as net interest income, but it might also lower their volumes. But I think net they are expecting that loans growth would still be stable. It won't be as high as previously, but I think all of the banks are sort of maintaining about a mid-single-digit loans growth. And coupled with the higher net interest margins, this would mean just positive news for the banks. Okay, I think that's all for me. I'll hand it over to the rest of my colleagues. Thank you.
Yeah, so I'll take over from here. Comparing GuocoLand and Wingtai, which is a better buy? So we don't have any coverage on both companies, but we can just briefly comment. For us, we prefer, if it's just GuocoLand and Wingtai, we prefer GuocoLand, mainly because Wingtai, they about more than a third of their business, and maybe about 40% of their business is in Hong Kong. So along with the Chinese property market weakness, the Hong Kong market, the property prices has also weakened for 2022. So because of the exposure, we would prefer GuocoLand, which is a lot, because of its exposure in Singapore, so it's a lot easier. I think that's all the questions now. Hand back to the rest of my team.
Yeah, and Terence, and we can also say that GuocoLand, correct me if I'm wrong, Terence, I'm not very is also leveraged to this upcycle in property, right? Because they're also launching a new office building, and they have a new launch, right, Lentor. So probably Guoco is probably more leveraged to the upside in property. Yeah, they're leveraged to they're more leveraged, sorry, to the current upswing in the property cycle. Yeah.
Yep. Thanks for it.
Is it one way to phrase it? Sorry. Yeah.
That'll be one
Thanks,
way as
Terence.
well, because the Lentor Modern is set for launch, so they have 2 more projects coming up, including Lentor, so that's good for that. Yeah. Thanks.
Okay, let me just let me just try to sorry, go ahead first, Darren. Sorry to interrupt.
Okay, so I'll take some of the read questions. So there's one comment that Frasers commercial trust repayment schedule is very stable and cash flow is an edge. I love Fraser. Yeah, I think you're referring to the Frasers Logistics and Commercial Trust. Yeah, so right now I see they are 80.6% borrowing on fixed rate, and they have a stable debt maturity profile. And you're also right to say that the repayment schedule is supported by logistics operation, as their logistics is 100% occupied, while their commercial side is about 90.6. So yeah, you're right to say that. And then another question is Frasers Hospitality Trust privatization. What will happen if I don't vote to accept the offer? Will I still get the offer price of 70 cents if most of the shareholders accept privatization? Yes, you will. So of all the people who vote, of all the votes that come in, so 75% of them will have to accept. So if 75% of those who has 75 or more percent of the people accept, then yes, you will still get the offer price of 70 cents even if you do not vote. Yeah, so I'll pass it on to Paul for now.
Yeah, thanks. Yeah, thanks. Let me just run through this before I hand it over to okay. Hi, to Zain. Hi, any thoughts on ComfortDelGro with this STI delisting? Okay, we can only guess, but if you look at of course, firstly, number one, there are stocks that have been delisted, they have been removed from the STI that have done well, like SPH and even Hutchison Port. The selling has probably already started, and one way to have a guess, if you look at the SPDR, probably the biggest STI, they have about 10 million shares, 10.6 million shares. So even if you assume all the passive funds combined, you double it, you're probably looking at maybe 20 million shares worth of selling. So this is probably a couple of days of volume, and my guess is probably less than 5 days of volume, and most of the arbitrages or the market makers would already kind of taken position of that. So you would, I think the selling is probably more or less halfway or 3/4 done already. So this is not like because their weight on the STI is 0.98, I think 0.98 or 1 percentage point of the STI. So you can actually check if you go to the website, SPDR, the whole 10 million Comfort shares. Nico, I'm not sure, but I don't think they are so large. So I don't think the impact would be that significant. Be a few days, yeah, and we probably already seen most of it. This is our own guess. This is only passive funds. Whether or not active funds do it, I'm not sure how many actually. Even if active funds, that means those who do benchmark, they may not even hold that much, so, or they may not even hold Comfort at all. Yeah. I hope that answers it. I'll try next week or maybe do a better slide to compile how much of the active funds, because you can actually see how much shares they have. Actually, it's public information for passive, not all the other active funds that hold it. Hi Paul. To Paul, if tomorrow China unified Taiwan by force, okay, hopefully not. What equities to buy or sell excluding gold, China? I wouldn't buy any equities. I think everything I would just buy gold. I think gold is probably the only hideout. Yeah, provided we'll all be around to spend the money. Yeah, even if the gold goes up. But again, I think the conventional thinking right now is that China is probably not ready to fight. Probably the end of 2030, that's what some people are guessing. Because they can see the consequence right now if you actually go ahead. They're probably not, I don't know, I'm just this like 99% guesswork. They probably don't think they're strong enough to do it now because you're probably going to be isolated like Russia. Okay, let me go to an easier question to answer. Hi Paul, any views on ComfortDelGro with it being removed? Yeah, of course, fundamentally hasn't changed. The selling probably the next couple more days, don't really see the impact because the most passive funds don't really hold that much of it. So the largest ETF, which is the SPDR, only owns about 10 million shares, which is a couple days volume. No, probably one, 2 days volume. Yeah, but sorry, I think we will try and do better analysis of it. It's just I don't have the details in front. Hi Paul, Apple is moving production out of China to India and Vietnam, or they are expanding production to India. Which one is correct? Correct. Who's the Apple analyst? Your general thoughts on the matter. Max, can you go?
Yeah, sure. For Apple, they are currently expanding, but some of the reports say that they are planning to move out of the production from China in the long run. So currently they are shifting have shifted their production capacity for the upcoming models to India, and some of the iPad production is also going to Vietnam. So of course, how it will benefit the company is that it will definitely help them to diversify their supply chain, especially the tension between China and US recently, right? And if Apple were to be able to get the Chinese suppliers to agree to work with them and produce their products outside of China, then it would be great. But for now, it should be expanding rather than moving out, because if almost 90% of the products are produced in China, so it will take years before the suppliers and Apple can work together and build the full-fledged facility that can produce all of their products there and move out of China. So yeah, their plan may be to move out, but right now it's in the expanding stage. Hope that answers your question.
How many phones in a year, Max, Apple sells? 200? No, how much?
Sorry, what do you mean, Paul?
No, how many million phones do they sell in a year, like Apple?
Not too sure, but I have to double check with the numbers.
Yeah, but what I'm trying to say is that kind of volume cannot be shifted overnight. Yeah.
Oh yeah.
Okay.
So that's why, yeah.
Yeah, but can you find out what's the numbers, the basics? Yeah. Okay.
Sure.
Let's move on.
Let me take on the question for Salesforce. So Salesforce price, it has been dipping. What is the main cause? So the main reason could be that the management's commentary. Management said that it's witnessing a slowdown overall, slowdown in IT spending. And the main reasons could be this could be reflected in the London sales cycle, as well as the company said that it's witnessing deal compressions. However, we believe that the long-term tailwinds, they are still intact. The company has a broad product portfolio, and it will, in the long term, it would be benefiting from the digital transformation trends from the enterprises, as well as there is a customer stickiness. And in terms of the second part of the question, what would be a good point for CRM? I think it's a buy right now, and we have a target price of $213. And maybe Zain could share his views on a good point over here to buy the stock. Thank you.
Okay, hello. So maybe I can just share the TA for Salesforce.
Okay, as we wait for Zain, let me just do a quick one so we don't let. So can you comment on UMS in light of the poor performance expected for US Semicon? Who are their major customers in US or China or where? UMS is essentially the main customers applied materials. So they will be more shielded than the US, than the whole semicon sector, because there's a huge number of wafer fabs being built. At the same time, UMS is looking to secure a new major customer, which could be 50% the size of the existing customers, of the existing revenue. So that new customer could turn on by end of this year as they complete their factory in Penang. Okay, hand it over to you, Zain.
Okay, thanks, Paul. So for Salesforce, currently it's trading around in a range. So the support level is about 155. And then if we go lower a bit, then based on the historical numbers, we could be at around 140. So if you're looking for an entry, maybe 140 to 150 plus region could be a suitable entry for now, given that it's trading in the range. Yeah. So with that, I think I'll carry on with the other TA questions. So the first one I see from Rel is Silverlake Axis. Okay, so for recently, Silverlake has been in a downtrend recently in this pullback channel after it hit the resistance at about 43 cents. For support wise, it looks like it's coming back to test the support region around the 34 cents to 36 cents region. And then there's also a confluence of Ichimoku support at about cloud support at 35 cents. So possibly we could see some support coming shortly to alleviate this recent sell-off. Yeah. Okay, then I'll look at other key questions. So next one is the Frasers Hospitality. So actually, for this, to be honest, there's not much TA that I can do, given that the news is a privatization and it's currently trading at 70 cents. So unlikely there's any movement in the share price for now, unless different offer is being put on the table. Yeah.
How's the share price compared to pre-pandemic? What was the pre-pandemic price?
Pre-pandemic, if we're looking at it's about this price also, 70 plus, okay. 70 plus cents, 74 cents is the resistance.
Okay. Yeah. It seems that they are taking advantage of because of the pandemic, they just take advantage. They take advantage of the pandemic to do a privatization. I mean, on paper, it looks like okay. Sorry, go ahead.
Okay, we do have a few other REITs questions also. So next one I see is Mapletree Pan Asia Commercial. So recently looks like the share price is pulling back also, but we are looking like we are testing this trendline support, which is at about $1.83. Then the short-term resistance wise, which has proved to be a key level, is around $1.86 to $1.88. As you can see, the price has always the bulls and bears have always struggled around this price range. Then the further up the resistance is at 192 to 196. Then if the share price breaks down lower, right, then we can see support at 178 to around 180s. Yeah. And next one I'll cover is OCBC. So OCBC, following the movement of STI, is also pulling back recently in more of a falling wedge pattern. So resistance-wise, strong resistance can be seen at around 1240 to 1250 region, as we have tested it multiple times and unable to break out of it. Support-wise, from the swing, using the swing low in July of 11.20 cents to the swing high of 12.46 in August, you can see some possible support will come in around the $11.80 region, which coincides with the 50% Fibonacci retracement support. That's all. Okay, let me see other key questions. Okay, I see venture. So okay, venture long term from a big picture perspective, it looks to be in a downtrend and towards a consolidation range recently, because we can see the lower highs being formed but also higher lows being formed. It also looks like it's forming a gigantic triangle wedge pattern in the making. Then for technicals wise, using the swing low of around $16.50 over here in June, and the swing high of $18.60 plus cents in August. The share price has currently pulled back to around the 50% FIBO level, which is around $17.60. Then I think that given that the MACD and RSI are still pointing downwards, the bearish momentum might continue to maybe the 61.8% FIBO level, which stands at $17.30 plus range. Yeah. So, and there's also cloud support, Ichimoku cloud support over there. So possibly we might test this region before it bounces higher. Yeah. And also, just now I saw from Y Wong, Raffles Medical Group, another question on it. So for this, I feel that there was a bearish pattern being formed despite the strong share price rally in this 1 month ago back, because there was this resistance zone around 140 to 143, and also coincide with the 61.8% FIBO level rebound. There was this bearish Harami pattern form. And also given that the increased volume, but however price wasn't able to break higher, means that sellers have started to gain a foothold in the stock. So likely we could see testing the short-term support range of about $1.30, which also coincides with this horizontal support and Ichimoku support. Then if it continues to go down, maybe we'll probably see the next support region about $1.20 region. Okay, let me see what the other questions. Okay, I will just cover 3 more before I rotate back to my colleagues. So I see Manulife REIT. So for this REIT, it looks like, from what I see, it looks like it will be near the all-time low as of now. So I can't really determine a support level. However, resistance is at could be at 55 cents, given that it was the COVID lows, and we actually broke down of it in mid-August, just last month, and then we made a lower low. However, share price could be forming a range and trading a little bit higher to form a dead cat bounce, given that we have a lower low over here, but then the technicals suggest a higher low. Yeah, so there's some bullish divergence over here. And to test, maybe we could test the resistance of 50 cents to 55 cents for the near term. Then moving on, we also have a prime REIT. So for prime REIT is also in a downtrend. Then currently share price looks to be, there's a chance that share price could be heading to the next support region at around 58.5 cents, which is 78.6% FIBO level. If we draw from the COVID lows to the highs these 2 years. Technicals wise, it's also in a pretty strong downtrend, series of lower highs and lower lows. And then from a trend line support point of view, we could see maybe we could be looking at support around the 58 to 59 cents region. So possibly a little bit more downside to come before we will see a rebound in the share price. And lastly, for DigiCore REIT, also in a downtrend this year, lower highs and lower lows. But recently there was a brief rally upwards, and then where it was met resistance at around 90 cents. So, and then the support is about at 71 cents. So for my take on this is that it looks to be trading, probably will trade in a range for now, given then the resistance is about here, the trend line resistance at 85 cents, and then the support region is near maybe the low ends of 70 cents over here. Yeah, so that's all from me for now.
Darren, you want to take on some popular REITs?
Yeah, so let me see the first. There's one question that said when you said REITs underperform, is it against a fair value or some other metrics which REITs will cover faster? I think this question is in regards to the table that just now Paul showed in his slides where the performance year to date.
Yeah, can you flip the slide before this? Yeah.
Yeah, so I think this is just against comparing with the other STI components.
Yeah, can you move the slide?
Yeah.
All right. Next. Forward, not backwards. Yeah.
And
This is going backwards. Yeah.
yeah, then in the meantime, I'll just answer the next read question. Many analysts seem to be positive on Singapore REITs with target prices still like 25 to 40% higher than their current prices despite recent sell down. Any comments? Yeah, so I'd like to reiterate that usually for analysts, when they put their TP is for a 1 year time period. So right now there are really a lot of headwinds, and then we expect the inflation to start tapering off soon. So with that, then the Fed might change their stance on the interest rates sometime maybe next year. I think Paul put up like the Fed's fund rate, the expectations is middle of 2023 when the rates may start tapering down. So when that happens, then there will be a good sign for REITs, but at this moment it's still increasing, so the sentiment is still quite bad. Next one is there are some questions on Manulife, Prime. There's a question on Manulife US REIT. So for Manulife US REIT, I understand that it's trading at like, just how Zane said, it's almost like their all-time lows. But then for Manulife, they really have quite a number of headwinds. Two of their top 10 tenants, which account for about 6% of their GRI, they are actually going to have their lease expire sometime next year, which is pretty soon. And then they have indicated that they're not going to re-sign the lease. So there will be an empty space and there will be a huge increase in vacancy. So because of that, we also think there are, and of course the classic interest rates increases, all this will really huge headwinds for especially these REITs that are listed in US. So for Manulife, we are not too bullish at the moment. Maybe sometime next year when things pick up, then we'll start seeing some bright spots for Manulife. Yeah, I think that's all for now. I'll hand it back to the rest.
Yeah, okay. Yeah, thanks, Lawrence, for giving us the iPhone sales. So our iPhone sales probably about 242 million. So yeah. So this kind of supply chain is obviously very hard to shift. It's almost 1 million phones a day. Yeah. But thanks for the information, Lawrence. Okay. Is there a possibility of rate hikes will continue further past the 2023 peak, or is there Fed, or is it that the Fed is fearing that hiking aggressively will tip? Yeah, I think it's more there is a possibility. I think it all depends how the trajectory of the economy. So we think there's a sharp slowdown coming down. So we think it's probably going to peak in March. I mean, this is our own guess in terms of the rate hiking cycles, because they'll rather depending on some views, or some don't, depending whether you think after you hike rates, whether there will be a lag impact. Some believe, some don't believe. I think some Fed officials don't believe. Some believe that the impact on higher rates is immediate. But the key thing to note is also when you hike rates, it's more important. It's just to stop the spread, the secondary impact. Hiking rates not going to stop fuel price rising, but hiking rates will just stop the secondary impact of it spreading into other types of goods, wages, and so forth. But I mean, I kind of do agree. Maybe by March, then you'll be clearer that the global economy is slowing down, because right now global economy is slowing. There's no global growth driver. China is not growing. Europe is obviously not, and then US is also slowing down. So with that, we think that global growth is going to slow quite sharply. What are the property counters in China worth looking into? Okay, I'm not a China property specialist, but Kohli is one. I think China overseas land because it's a state bank. The only reason why we say property is just that for the Chinese equity market to recover, property has to move. Otherwise, this thing is just going to go sideways. And we think that the relaxation will start to improve. Relaxation of property measures will start to improve. But again, this is just our thoughts, being based on Singapore. Paul, any views on Asian high yield? Has it bottomed? Sean, you want to take it on first before I answer? Yeah.
Regarding the high yield bonds, Asian high yields, right? I'm not too sure about it yet as well, because I've not really covered Asian high yields yet. Maybe Paul, would you like to help me out?
Yeah. Okay. Anyway, when you're buying high yield bonds, you're taking on in general, because it's a corporate high yield, right? So you're taking on, and essentially a lot of it is really probably who's the one who's going to issue the most junk bonds is probably the Chinese developers. I don't have the breakdown. So probably it's going to be a lot of Chinese developers in there. So when you buy Asian high yield, you're going to take on credit risk and of course interest rate risk. But every bond has interest rate risk. So in terms of the credit risk, that one I really don't sure, because I'm not sure what Asian high yield that our attendee is targeting. So I apologize, I can't help you on that. But in terms of the interest rate risk, our own thoughts is probably maybe at the later part, because we still think rates will still climb because the Fed is still going to move 150 basis points. So we still think there could be upside in the interest rates, although the yield curve is the 10-year bond yields have kind of reached their peak, and also you're seeing this inversion. But we still think that as the Fed raises rates, Europe raises rates, despite everyone thinking the global growth is slowing down, we still think there could be upside in interest rates, and maybe a better timing will be probably by year end. Yeah. Again, this is just our own views. Yeah, but again, no, depends on. So credit risk we really do not know, because we're not sure which type of instrument you're buying. But interest rate risk, we think maybe at the later part of the year, maybe it's a better way to buy, because you still got a few more rate hikes, regardless of economic conditions, that the Fed is going to do. In your previous PowerPoint, the worry of other operating income decreasing is no. I'm not sure which one is it. Depreciation. However, land has no depreciation, so I'm not sure whose slide is it. Is it referring to? Sorry. You mentioned last week you're bullish on Chinese property. Do you recommend getting ETFs? I'm not sure if there's a Chinese property ETFs, but if they are, again, we are just doing a very contrarian bet now that the sentiment has been so bad. Evergrande has the news of property weakness is really more than a year old. So, and we think, like we mentioned earlier, this is just our own views. Yeah, that there is relaxation going on. Yeah. And property, you're not buying this for long periods. You probably just have a 3-month holding period. It's just a big trade on it. What will happen to GYP? Sorry, I'm not familiar to GY. I'm not sure what is. I'm not familiar with GYP. What's your view on Viacom? I don't have a really strong answer because I don't have the data, but it's a very stable business, I guess. But I don't have data in terms of the pool of motor vehicles in Singapore. If I had the data, maybe I can better help you answer. But there is a recovery going on. I mean, Viacom's industry. But apart from that, really I don't really have, because I'm not sure whether the pool of vehicles is expanding in Singapore or not. Yeah, without that number, I'm really not sure how to get. Sorry, I don't answer that. Jonathan, you want to take on the Spotify one?
Yeah, sure. Yeah, so this question here, is Shopify and Sea a buy right now? So I can't actually tell you whether either counters are a buy at this point in time, but I will just briefly run through them. So for Shopify, I think that their stock price is basically back down to its pandemic lows in March of 2020. So I guess from that perspective, it does seem quite appealing. In terms of their business model, they're heavily integrated with e-commerce. So generally, if you see your e-commerce growing in the long term, which we do, then it's definitely a good opportunity. But of course, in the near term right now, like most other e-commerce companies, they've just been getting hit by high inflation and weakening consumer demand. In terms of their financials from a business standpoint, they are actually profitable, except for the last 2 quarters where they've had significant losses from their investments in equity investments. If you look at their operating income for the last 6 months, they are slightly negative, but that's because they spend quite a lot of money on sales and marketing and R&D. But I believe that the company is trying to reduce these costs, especially in the near term, just to battle the weakening, the slowdown in revenue growth for at least the rest of this year. But overall, Shopify is still a pretty good company. It's a high growth company. So we do actually quite like Shopify. In terms of C, there are 3 aspects to see. First is Garena, which is their gaming side, which has been revenue has been declining. They also mentioned that they're actually laying off quite a number of staff in that department. And then there is the main bright spot right now would be its e-commerce, which is Shopee. So their revenue for this past quarter actually was more than Alibaba's international e-commerce. So all e-commerce all e-commerce revenue outside of China. But it does obviously compete in a very, very competitive e-commerce landscape in Southeast Asia. Their last pillar would be C-Money, which is their financial services. They're spending quite a lot of money in this area, especially as it tries to kind of tries to get a lot of users, a lot of underserved users in Southeast Asia and Latin America. But for C right now, they're still not profitable. They've been burning through cash quite a bit. In the past, they also used to rely heavily on convertible notes as its preferred method of raising funds. And this was a very attractive option for a lot of investors because these notes, the strike price on these notes was super low, and a lot of the conversions actually were very beneficial to both the company as well as to investors, because you can basically buy shares at a discount. And for the company, you just don't have to pay off these notes. But with their latest round of funding, issuance of convertible notes, the strike price is significantly higher than, I think it's 3 or 4 times the current stock price. So even though they are going to be expiring in 5 years, it's going to be quite questionable whether you'll be able to convert these notes moving forward. So this might, obviously the company might have to pay off, use their cash and pay off these notes in the future. So for Shopify, overall quite a good business model. For C, I guess there are a lot of headwinds they has to face in its businesses. But yeah, I think that's all for me. I'll pass my time now back to the rest of my colleagues. Thanks.
Yeah. Okay, we will try to answer all the fundamentals. Yeah, sorry for earlier. The question on GYP was the takeover offer. So yeah, they revised the offer to 18.5 cents. It's probably the highest price in 5 years. So this is a property company, I think. GYP Properties. Yeah, sorry. The only thing I can say is they didn't say this is the final offer. So but this is definitely the highest price in 5 years for GYP. So yeah, sorry, I didn't really understand that question earlier. But again, their offer is still below the book value, but I guess it's still fair, I guess, since it's the highest in 5 years. Okay, let me just try and take on any other last ones for then we will end it off with Zain. What's the best instrument to short US index? Is the inverse ETF a good way? Yes, I think yeah, it's better than I guess it's not, there's no margin in it, so I guess you're protected in that sense. Yeah, but again, all these inverse ETFs and products, there's a decay in this because they're going to roll over the future. So these are not for you to buy and keep for months. It's a short-term trading tool. Because all these ETFs, there's a decay. So because they roll over futures, so over time, there's a cost to rolling over the ETFs. Because yeah. Any interesting investment ideas for September Q4? I guess the Marco Polo was interesting because what's happening in Marco Polo is that there's a big tailwind for them. So what has changed, I think, firstly, so Marco Polo they own a lot of AHTS. So what has changed is that there's a big pickup now for oil and gas. And number one, and number two, the other new thing, the new demand, always interesting, there's a new demand coming. So the new demand for AHTS is from the offshore wind. So Taiwan has started offshore wind, but the one is coming from China. But because China never had much offshore development or any offshore wind development, they bought all those AHTS apparently that all these bankrupt oil and gas companies, a lot of them, all the vessels that from the banks that were stuck with the banks all went to China. So and after Taiwan's big demand, so what you need AHTS to pull, because if you want to install all these huge wind turbines offshore, you need to transport them offshore. So AHTS is one of the vessels that will carry. I mean, they're not going to, because it's so huge, not to be put on the AHTS, but it's going to pull the barge or whatsoever to bring it offshore. So it's like the workhorse of offshore for offshore. And the next demand will come from Korea and Japan. At the same time, oil and gas demand. So it looks promising for offshore marine or any of these OSVs. So there are other listed ones like CH Offshore, but again, I'm not sure. I haven't really met them. So that is one area that seems to be doing well because of there's a big demand coming for the vessels. Okay, I think we probably covered as much as we can. So I think I will hand it over to let me just run through. I will hand it over. What is the outlook for oil and gas related stocks going forward? Hi, are there any potential privatization Singapore market? We thought SIA. I always thought SIA engineering would be the privatization, but that has not happened. Yeah. Let's do a rough run through, because for privatization you need to look at the valuations of maybe cash and so forth. So let's do one exercise and try and give you a better answer. But we always thought SIA engineering will be merged with the ST engineering's aerospace arm. Last one. What's the outlook for oil and gas stocks going forward? I think we are still positive. I think since oil and gas will still be elevated, since capex has been far below trend. Even though oil prices have spiked up, but oil and gas capex is probably only up. It's probably don't have a chart, but it has hardly budged up. Yes, there's very minimal increase in oil and gas capex. So yeah. Okay, sorry, I won't continue. I'll just let Zane do it and end by 1 p.m. Thanks.
Okay, thanks, Paul. So I think I'll just start with the TA for Shopify for the counters that John talked about just now. So Shopify looks like in a very big range for now. The support is about at 29.70 to the 31.70 range. Or the resistance can be found at 39.50s to about the high end is 44.80s range. So I personally think that the support at the 29.30s range is pretty strong, because we see that in the past, in 2019 to 2020, it also held as a support back then in over such a long span of time. So this support region should be able to hold the stock for some time. Then for C Limited not as good, because after the recent results, then there was a sell down, right? Then the resistance was formed at 83, 84 to 90, 94 here. Then this support level at 65 to 70 was also broken, as you can see. So we might be heading to this swing low at around 54 to 56 area. And then if further downside might actually bring it to the 52 to 53 area, which was the previous resistance level at this key level back then in 2020. Yeah. So now I'll cover the stocks. So I see IMS APAC rate. So for this stock, it's in a downtrend with lower highs, and then however the lows has been maintaining about 133 to 134. So we could be seeing this bearish descending triangle pattern take place. Yeah. And then the resistance is 138 to around 141. So with this consolidation, we need more time to see how the stock will actually break up or break down to determine the next direction. Okay, and I see UOL. And for UOL, the long-term view is that it could be a bit similar to our venture. It could be this very big wedge pattern over here. Yep. And then the resistance is at around 735 to 760 over here. Then the support is at 670s to 690 region. So in the short-term view, it looks like it's continue to trade in a range pattern unless there's some breakout that happen of this wedge pattern. Yeah. Then long-term wise is in a very big consolidating wedge pattern over here. I want to ask the TA for gold. So gold has continued in its bearish momentum ever since it reached a double top of the 2070 price level, and it's still residing in this downtrend channel resistance. Short-term support wise is at around $1,680, and last week gold sold off quite a bit. Then the resistance level is at 1,730 to 1,770. Then further up, the next resistance level around 1,780 to 1,800 level. So if this support swing low holds, right, we might see a short-term some bounce coming for gold. Yeah. If not, if this support is broken, then we might see further downside where you may find support at this trend line resistance of this downtrend channel. Then A for CBG, Comfort is ranging in a trend for now. Then despite the news of it being removed from the STI, it's currently being supported by this trend line support over here. So the support is around 136 over here for now. Yeah, then resistance, the high end of resistance 148 to 152 remains. Then if this trend line doesn't hold, right, then we might come back to test the swing lows generated this year, which is around 133. Then DBS. Okay, DBS also currently looks like in a consolidating pattern, which could actually be possibly bullish given that there was this upwards movement and then we are currently consolidating. So if we break out of this triangle over here, right, we might continue to see more upside, maybe to test the 3450s resistance generated over here. Yeah. But if we break down, then you can see the support around 31 to 3190 over here. Then the lowest end of the support is the 2950s, 2960s over here. And for UOB, it's also forming a consolidating triangle pattern. Just that there wasn't a very big prior move prior to this consolidation as compared to DBS. So for this, the immediate resistance is about $28 and upwards is about 29.70s. Then the support wise is about 25.90 to 26.40 over here. So if we compare the charts for the three local banks, right, I would think that DBAS has the most bullish chart as of now. Then maybe followed by OCBC, even if this support holds at 1180. Then UOB looks the weakest, I would say, given that it's maybe just bouncing from the support and then forming a triangle without much upwards rally prior to that. Okay, then I'll do TA for Escort. So the resistance for Escort is found at 117 to 118 over here, which was pretty strong given that we tested it over a span of 4 months and we couldn't break out of it. And now it's coming back down again. Then the short-term support wise, if we look from a weekly point of view, there's pretty strong Ichimoku cloud support that's coming in at about 105. Yeah. So I would think that 105 would be a pretty strong support level there for this stock. We should also meet with this very important trend line uptrend support that might provide some buyers for this stock. Yeah. And then SIA. So for SIA, it's possible 2 directions might take place, given that, okay, so firstly, there's this resistance trend line over here. And then, however, the stock has been making quite a series of higher lows over here. So it could be forming a consolidating wedge over here. Then the short-term support is at about 520 range, I would say. However, another possible scenario that could take place is this pullback channel that might happen. Then in this case, the support region might be at near the $5 region. So most importantly, we need to see this junction around 520. We need to see whether there's support coming in for the stock. Yeah, to determine the next direction for this. Then we have a series of some mid caps. So I'll start with Jaffa. So for Jaffa, it's a relatively low volatile stock. Mostly been consolidating and ranging. For now, it's forming a descending triangle pattern, which is bearish. And given there was a big downwards movement prior to that, yeah. Then the support region is around 56 cents, 57 cents. And the resistance wise around 60 cents over here. So for this, we need more time to determine the next direction, given it looks like it's still consolidating. And for Rex oil stock, this one actually looks to be not too bad actually, given that there was this bottom and bottom, so there's a double bottom that is formed, and then with a uptick in the momentum indicators. So it's possible that some upside would be coming for this stock. Then the resistance could be the previous key levels at around 31 cents. And then Ichimoku cloud resistance is around 30 cents. Yeah. So possibly the stock could break out of this trend line resistance and hit the next resistance levels around there. For RH Petrol Gas, so similar, which is an oil stock. It looks like it's currently forming a range. Support at around 19 cents, then resistance, midterm resistance are 21.5 cents, and the higher end at 23 cents. So I feel that we might be continuing to see a range pattern form maybe at this important trendline resistance area, right? We need to see whether stock breaks out or continue to remain in this range. And Asian KTV. Stock has been in a downtrend this year, and with this downtrend channel being formed, it looks like a bit more downside could be coming to test the 11.1 cents area, which is also the 8.6% FIBO level over here. Then there's also some support level at 109 to 116. Yeah, so it looks like more pullback could be coming to form a greater support for this stock. Next one, Genting. Okay, Genting, that time after the results, it broke down of this bearish rising wedge pattern, and then looks like we are coming back to this support level from after that time, I think when the stock went up because there was rumors about this competitor trying to acquire it or something. Then we are coming back down again. The strong support is around 76 cents to 76.5 cents. So there was this 61.8% FIBO level, and then this horizontal support level over here. So look, we are coming back into it. So let's see how the stock reacts. Then the lower end of this support is around the 71.5 cents region. For Yangzijiang, next one. Okay, so this one a bit find it a bit interesting because there was this pretty strong uptrend support. However, 2 days ago around that, there was this sell-off that broke the trend line support with an increase in volume. So sellers were pretty strong in this stock. And then currently there's some short-term buyers that came out on 91.5 cents, which is the key level over here. But because of this breakdown, right, this previous support will become a level of resistance around the 94.5 to 95 cents area already. Yeah, then for this is also met with this confirmed with the cloud resistance at 95 cents. Yeah. So short-term wise, the stock has gone from bullish to bearish pattern for now. Yeah. Okay, then I'll see some US tech stocks, which I'll start with Alphabet. So for Alphabet, slightly short-term wise is bullish, but long-term wise it could be bearish, given that the bigger trend in play is a downtrend. But however, we have a weak uptrend for now with higher highs and higher lows. We could be seeing some support from around this region, around 103 to 107 over here. And given that this is the trend line support area. However, if we do break down here with a big move, it could lead to further downside to maybe 100, which is the 100 horizontal support over here, which is also a psychological level of support. Yeah. So we need to see whether there's support coming over here to push the stock back higher. Then Microsoft. So for Microsoft, as we broke out of this downtrend back in the start of August, it would turn out to be a false breakout. Then we came back down into below the trend line, and then the short-term support wise could be found at around 240 to 250 range over here, and then short-term resistance could be at the 260s to 275 region over here. Yeah. Then lastly for Amazon, then it's also looks to be coming back down to test this trend line support and also previous resistance area over here, turn support, which could be found around 116 to 123 over here. Yeah. Then there's also Ichimoku Cloud support at 122 region over here. So let's see whether some buyers can come in over here. And then for short-term resistance, it's 137 to 147 range over here. Yeah. So that's all for the US tech stocks. If you're interested, I'll be hosting the US live counter review session every Monday night from 8 to 9:15. So you can tune in if you want to find out more about the US stocks. Okay, then I see some other counters on Intel, Merck. So Intel has been very bearish, a series of lower highs and lower lows, and keeps on breaking the support level. Recently, we actually broke down this trend line support, then at around 33. Then we are currently sitting at $31. So based on the historical price level, let me see. Moving back like 2015, 2016, right? There's support at around the 970, 980 region. Then another horizontal support level down there is $27.80. So we could be coming to test these two levels for more to see whether buyers actually step into this stock. But overall it's still in a very bearish trend. Okay, then for Merck, after there was this big upwards move at the start of this year, then we are sitting in this very big range bound pattern. Then the support region is at around $83 to $85. You can see that we tested once and twice this year alone. So I guess there will be buy prices probably coming in at this price level. Then resistance wise, the highest end is at 94, 95. Then midterm wise, we could see it around at $90 range over here. Yeah. So probably my take is that you probably to continue to move in a sideways region for now. Okay, TA for Grab. Okay, Grab. Looks like it's probably likely to continue to be stuck in a very big range for now. Okay, let me draw the support levels. So support is at the swing low around 230s to 260, 270 over here. This huge range, and then the upper end of the resistance at 370s to around 410, 420s over here. Then intermediate resistance could be found at about 290s to 320 range over here. Okay, TA for some Singapore stocks now. GuocoLand, probably in really sideways region for now. Resistance at around 168 to 173 range. Then the support region this year is around coming in at about 155 to 158 over here. Yeah. So, okay, I will just cover two more. Sorry, there's not enough time to answer all your questions. So, okay, for I see Marco Polo Marine, very bullish, still in a bullish trend. We broke out this consolidating triangle, and there was this big upwards move accompanied with volume, and then we hit a resistance of 4.6 cents. So short-term wise, I would think the support can lie at 3.9 cents, given that this was the swing high before there was a retracement and breakout. Then the lower support is around 3.5 cents, which was the previous high over here. And then back tested to become support over here. Then resistance will probably come at this swing high of 4.6 cents, or this trend line resistance at about 4.9 to 5 cents. Then the last counter for today will be Golden Energy. So this there was a very bullish movement today after it broke out this cup and handle bullish pattern, and then continue to have this upwards movement. So Fibonacci wise, 73 cents it broke out of it, might provide some resistance over here. Then let me see. The next big resistance could come at about 78 cents over here, and then the next resistance at 81.5 cents, which is the swing high. Yeah, so sorry, unable to take all your questions for today. Yeah, so I think I will end the webinar over here. So Paul, do you have anything to add?
Yeah, there's one more question on UL. Yeah, so sorry, we don't really follow UL. They don't really meet with investors, so we can't really help you on that. But with that, I'd like to thank everyone for your questions. I think, sorry, we just run out of time. We just try to put a hard time stop. Otherwise, you might just keep on running over. But again, you can always join us in our poems community, the P3 community, and you can actually post your TA questions there, and Zain will help to answer. So if you go to download the new P3.P2 community, all the analysts are there. So if you have questions, you can always just post them there. With that, I'd like to thank everyone for your time, and especially your questions, and hope to see you next week. So thanks again, everyone. Have a good week ahead. Bye-bye.